The ticker moves across the screen in a blur of green and red. But for those of us watching the plumbing of the global economy, NVIDIA isn't just a ticker. It's the new central bank of compute. As we sit here in August 2026, with the market cap oscillating in the stratosphere, the retail narrative remains hopelessly stuck on AI hype. They see the headlines, they see the sky-high valuations, and they see a chart that's traveled a 22,000% path over the last decade. But look closer. While the amateur crowd is debating whether to sell because of a minor consolidation, the institutional reality is entirely different. We are witnessing the most aggressive infrastructure build-out in the history of human industry. The bottleneck isn't software anymore. It isn't even just chip design. The real structural bottleneck is the physics of heat, the tyranny of data transfer speeds across optical interconnects, and the raw energetic limits of the silicon itself. Most investors miss this. They look at revenue multiples, but they aren't looking at the fact that TSMC is now using NVIDIA's own Metropolis and AI models, literally NVIDIA eating its own cooking to solve nanometer-scale defects in the fab. This is a closed-loop system of perpetual technological acceleration that the standard financial press is too slow to report on. Institutional heavyweights understand that this isn't about selling a product, it's about owning the gatekeeper of the next era of energy and intelligence. When you see daily volume spikes during these supposed pullbacks, that isn't panic, that's systematic accumulation. Large-scale institutional money isn't worried about next quarter's margin fluctuations. They are looking at the 10-gigawatt compute targets set by massive enterprise players and sovereign funds. They are buying the foundation upon which the next 50 years of global GDP will be built. Think about it. The hyperscalers, the Googles, the Metas, and now even the spacefaring giants like SpaceX are locking in their entire future roadmap to the NVIDIA CUDA ecosystem. It's not just a chip, it's a proprietary prison of performance that competitors struggle to replicate because they lack the holistic software stack. I have to ask you, looking at this landscape where the biggest players are essentially writing blank checks for compute, how many of you are still holding for the long haul, and how many are still waiting for a dip that the institutions are likely never going to let you buy at the levels you want? We need to strip away the chipmaker label. Historically, NVIDIA was a gaming company, then it was a data center play. Today, that framework is prehistoric. NVIDIA is effectively an AI factory infrastructure utility. If you think of them as a consumer electronics or hardware cyclical business, you are going to get slaughtered. The business model has shifted into a high-margin, software-defined hardware monopoly, where the hardware, the H200s and whatever comes next in the Rubin architecture, is just the physical vesicle for the CUDA software layer. They have successfully shifted their revenue from discrete sales to long-term, high-visibility commitments from the largest capital-spending entities on the planet. When you hear the bears talk about customer concentration, they are ignoring the reality that NVIDIA is the only partner capable of meeting the power and performance density requirements of the modern data center. The old cycles of wait for the next console release or monitor crypto mining demand are gone. We are now in a world where AI agents are becoming active in the supply chains of every major retailer, and those agents require the very chips NVIDIA provides to optimize their existence. The future outlook is a massive high-wire act, but one that NVIDIA is uniquely positioned to traverse. The catalysts are clear. The transition from the initial catch-up phase of AI spending to a phase of deep, innovation-driven integration. We are looking at a fiscal engine that is projected to generate nearly $178 billion in free cash flow, a number that sounds like a typo to the traditional value investor. Yes, there are risks, geopolitical tensions in the East, export controls that keep the C-suite up at night, and the ever-present threat of hyperscalers trying to go vertical with their own custom silicon. But look at the trajectory of their innovation. NVIDIA isn't just selling a better mousetrap, they are redesigning the floor of the room. When you see volatility, remind yourself that noise is just the market trying to price in a future that it doesn't quite believe in yet. The real story isn't the price on your screen today. It's the fact that we are currently laying the tracks for a global industrial AI revolution, and NVIDIA is the only one with the permit to build the train. Don't get lost in the short-term noise. Keep your eyes on the silicon.